Hi, my name is Soumya Sarkar और आप देख रहे हैं Wealth Redefine blog. In today's blog, we will be talking about how market has performed in this Russia-Ukraine conflict and where the market will see itself and how the rising of market will happen and everything. Now, first, let me tell you that if you look at the past war of Russia, Ukraine, and if you look at the global scenario, we must say that global cues are not good. Oil has crossed $100 per barrel for the first time after 2014. See, I remember a report of 2014 when Goldman Sachs said that oil $100 per barrel probably a history. And looking at the different calculations and everything, most of us agreed that probably $100 a barrel is a history. But as history repeats itself, so in 2014, we can see that same history has been repeated in 2022. So that means the oil has gone up, all commodities have gone up, mostly aluminum, zinc, copper, all have gone up because of this conflict. So now the question is that how market has phased out at this point of time. Market had corrected by approximately more than 2%. And if you look at the broader market correction, is approximately 4 to 5% kind of a level it has corrected. Index, I still believe that are not been corrected that much, but if you look at the individual stock, they have corrected a lot. So in this point of time, if you see the Nifty as well as the bank Nifty, everything, you can see that they have corrected a lot. So in 1 month, the Nifty almost have corrected by approximately 6%, 5.6. And if you talk about the last week, it has almost around 2.5%, 3%. So it shows that because of this conflict and the crude has gone up and commodities have gone up, all the sectors in Nifty has seen a correction. Bank Nifty is one of the highest of it. But how we are going to see the market from next month onward or next week onward? I think that Russia-Ukraine conflict will get resolved sooner or later, and we can see a bounce back from the market. See, in my lot of videos, I told one thing very clearly, that market has three kind of correction. One correction is called dip correction. One correction is called major correction, and one is called minor correction. Deep correction is correction of approximately 40 to 50%, but it comes once in a decade, so really once in 8-10 years kind of a time. Like 2000 we had a dot-com bubble, and 2008 we had a financial crisis, 2020 we had a COVID crisis, and all those things. Major correction happens is approximately 20 to 30% correction, which happens in almost once in 2 to 3 years time. And minor correction is approximately 5 to 7%, maximum 10% of correction, which happens off and on in a once in 6 months or 3 months kind of time. So obviously in 2020, when market started going up and absolutely no break in between, we are anyway sitting on a position where we are expecting a correction. But correction, when it will come and how it would come, nobody knows. So based on that thing, I personally believe that Ukraine, Russia or oil price is a great excuse to market for the market to have the correction. If you right now look at market has almost corrected approximately broader market around 12 to 15% level, and I think another 4 to 5% correction is left. If tension escalates and more countries join the war, then probably things will get much more difficult and correction will be much more longer and severe. But if it is not, I think slowly and gradually it will get over. But a lot of investors asked me that whether it will be get over immediately after this conflict gets ceasefire or something. No. See, you have to understand war has a very significant effect over the period of time. Because the commodity prices have gone up and everything has gone, so inflation will go up. Once inflation will go up, the central banks all over the globe will start pulling the rate down. They will try to reduce the money flow in the market. So all those things is going to happen, and obviously that impact on market will happen. Fortunately, after almost more than 2 lakh crores has been taken out by FIIs from Indian market, we are still approximately around 16,200 level to 16,500 level, which is a great thing. So our dependency on FIIs has come down significantly, though it is not, because if you look at in terms of COVID, they put approximately 2 lakh crore, and after COVID from almost September, October onward, they have pulled approximately 2 lakh crore. So at that level, it is fine. But if you look at the overall FII, I think it is still very high. So what strategy you should follow? I believe the people who are doing it for long term, I don't see there is a much need of worry. Conflicts and wars will happen. In 3 months back, it was Afghanistan versus US. 3 months down the line, it's become Ukraine and Russia. 3 years down the line, it may be China, Taiwan. You may see a lot of conflicts. We do not know. But if you are a long-term investor, you should not be worried much about it. This corrections is actually a good friend of you, where you can put the money at the cheaper rate and cheaper valuation, which is much more important. But if it goes, for example, short-term investment, or if you have invested based on a YouTube video or WhatsApp video, it may create a problem for you if the money is for short term. If the money is for 4-5 years from here, your goal is around 4-5 years from here, I don't think you should not worry much. But if it is in 4-5 months, yes, you may not make the return. Please remember one thing: if you have a goal, if your goal is nearby, suppose if you have a goal in 2023 or 2022 end, you should have taken out the money and move it into more of a debt or a fixed deposit or savings bank account kind of a thing, rather than putting money in equity, because equity is anyway risky. It is a risky asset class. It gives the return handsomely. It is one of the asset class where inflation can be beaten handsomely. But opposite way, you have to remember that this is a risky asset class, and once your goals are near, you should pull out the money from equity and keep it on a safe account. If you are looking for a regular earning from your portfolio, I don't think there is much change is required. You may continue as it is. But if you are putting the money, I think it is better if you put the money systematically and not in one go. Follow certain conditions, like don't put one go money, you divide into 20%, or if you go by SIP's way on monthly thing, then it would be a better way. If you find that valuation is really cheap, the Nifty P comes down to something around 18, 19 or 20, then you can push your equity in one go. Otherwise, it would be better if you can put the money on a staggering way rather than in one go. Because in a staggering way, if you put the money, what will happen is that you are not buying at the same time, and if the falls happen, that fall would be severe and your portfolio will come into a big rate, and you will have, even the things get cheaper, you do not have the money to buy them. So that should not happen. I think if you manage the portfolio well, talk to your investment advisor, understand the scenario and how he plans to navigate your portfolio, then it would not be a difficult thing for you to get out of this time. You have to understand that equity market always go through this kind of scenarios. So when it gives return handsomely. When it takes the return out of it, it takes out also massively. But if you are again, I'm telling you, if you're a long-term investor, no, not much worry. If you're a short-term investor, then you should have taken the money out before. If you are not, if you're still in a considerable profit, you may take out something. Or if you do not require the money, if you can manage the fund from other sources, then you should use that sources and then keep it here. And once the market recovers and everything, you may take out. So this should be the ideal way. But I strongly recommend you do not go by a YouTube video or by a WhatsApp or by a Twitter account or recommendation on Facebook. It is strongly recommended that you go to a financial advisor and an investment advisor who are all SEBI registered, who are all AMFI registered people. They know how to do it. They can help you to guide on your goal, take the money at the proper time, and then again put it back at the right time. If you have a patience and if you have a good advisor, I don't think you have a problem. But in my personal view, another 2 to 3 months from here would be a challenging time for all of the investors. Thank you for watching the video. If you like it, you may share the video. You may subscribe to our channel, or you can send us questions. We'd like to answer it whenever we can. Thank you very much for watching the video. Namaskar.